now.
Good afternoon, good evening, depending on which coast you're on. I'm on the left coast in California, and welcome to all of those who are attending today. This one's known as Futures Trading for the Uninitiated. I'm going to just educate you about the futures subject. And a lot of people have questions. They can trade stocks, but they don't know how to trade futures. So I'm going to tell you how. My passion is helping beginners. Well, my passion is trading, but I love to help beginners and intermediate traders learn to trade. And this is about futures, but I trade everything. I trade stocks, and I trade futures, and I trade Bitcoin and Ethereum and all those kinds of things. That's my passion. And my second passion is for teaching traders who have not tried futures or not traded it at all and want to learn how. And it's also for those who think futures are risky. I'm going to show you why they're not really. And it's lastly for folks who want to improve their trading results. So if you're trading and you're slipping on some of those trades and not doing what your strategy or your outline says for you to do, then we're going to work on improving your trading results. So it's for beginners and intermediates. This is the disclaimer. All the yellow stuff is really important. You can and will lose money trading. Use only risk capital. That means just be prepared to lose it, because you may lose more than the amount you really originally invested with futures. The results I'm showing you today are hypothetical. They're not my actual results. And hypothetical performance, it makes no representation that any account's likely to achieve that. In fact, there are frequently sharp differences between hypothetical performance results and actual results, because hypothetical trading does not involve financial risk. It's hypothetical with fake money, and your trading record can completely account for the fact of financial risk and actual trading. So all of these things could adversely affect your actual trading results. Many folks have started their trading and investing portfolios by choosing stocks. That's generally where people start, either there or options. Fewer people have traded futures, since the word on the street is they're too risky. This talk will help you to dispel any concerns you may have, and will teach you how I trade futures from my own account. This is educational only. I am not suggesting that you should do what I do. And I am a trader and have been for 41 plus years. I trade futures and stocks. I do not trade options. I only know how to lose money with options. I'm going to tell you about myself, but first let me show you how I trade. I trade the S&P futures contracts, 1 minute and 5 minute charts, so it's really fast. Long-term stock holdings, I do have that. My favorite stock is Tesla. I'm out of it at the moment, but I've made quite a bit of money on Tesla. It's one of my largest holdings when I do it, and I'm still watching to buy back in. Long-term stock holdings are a week or more, and I do trade a little bit of cryptocurrencies. So on the 1 and 5 minute charts, I might have 3 to 5 trades a day. And on long term, it's a week or more, sometimes months. And crypto, I'm just holding it to see what happens. Here's how I trade. This is my chart, what my chart looks like every day. I've got 2 things on here. SunnyBands, which are the green and teal bands on the upper side, and green and teal on the lower side, tell me exactly when to get down and when to get out. And I'll show you how I do that later. This indicator on the bottom is what I call my dynamic moving average histogram. And these colors tell me exactly what to do, when to buy and when to sell. So you see the gold line in the middle. I've got a dynamic moving average in the middle here. It's a purple line and a gold line. And it's hard to see this way. I've got another indicator that makes it much easier to see. It's called who's on top. So you can see that the gold line is on top here, gold line's still on top, and then it turns to purple. So gold line on top is your macro view. It tells you you probably should be long. And the purple line on top tells you you probably should be short. And those things turn much faster than your standard moving averages. The reason I invented this, now I'm a mathematician, but I use my skills as a mathematician to create these indicators and to create a moving average that avoids whipsaw. So this thing says gold on top all the way from down here. So right here is the entry, and it turns purple right here, and there's the short trade. So this dynamic moving average is reflected down here in the dynamic moving average histogram. And I use these two things together, and that's all I ever use. I don't use anything else. I use these two things to show me everything I need to know about trading. Somebody said I'm not sharing the correct monitor. Let's see. Is that better? Yes, it's better now. Pete says no. Okay, bingo. I guess I got it. Let me go back then, because I want to show you the SunnyBands. There we go. So this green line here in the bottom is 1.2 average true ranges away from the dynamic moving average, which is the purple and gold crazy moving average that I invented, because I found out when I was a young trader that whipsaw is about the worst thing that can happen to you. You can catch a good move down, good move up. You got some whipsaw right in here. You've got some whipsaw right in there. And all the way over here, you've got a lot of whipsaw. But if you know how to trade SunnyBands, you buy at the bottom, sell at the top, buy at the bottom, sell at the top, buy at the bottom, sell at the top. And that's just what I do. I just follow these SunnyBands and the dynamic moving average histogram, which is purple, green, gold, and red. And I'll explain that to you later. Okay, this is the kind of insights you can get for free by signing up for my Sunny Side of the Street newsletter. I send it out every Sunday night to people who have registered on my website, which is moneymentor.com. So if you go there and sign up for the free newsletter, you get it every Sunday night. Or if you can't find it, it's on Money Mentor under articles. If you can't find it, you can email me or call me. My email is sunny@moneymentor.com, and my phone number is at the bottom of every page on this presentation. And it's my cell phone, and I answer it all the time, 24/7 almost. So there's my email address, and there's my phone. Or when we post these slides, if they go to PDF, you can be able to click on them. So just quickly, I was rated #1 trader twice with 365.4% and 178% profit the next year by Stark Research. This is a company that rated all CTAs. CTA is Commodity Trading Advisor. So they rated all CTAs. I had no idea that they were rating me, and I got those profits. I was at the top of the list both of those years. And I just used my SunnyBands and my dynamic moving average. That's it. That's how I got it. I don't engage in contests, though. This is real money. And you can see Rourke International is my trading company. You can see right there, right at the top. I have 3 degrees in mathematics and 1 in photography. I travel all over the world taking photographs. That's my hobby. I've taken classes at Stanford, UCLA, and Wharton School of Business. I've been programming for 52 years, trading for 41 years. I started out as a systems programmer for Lockheed. 4 years after that, I founded ISCO with some friends. We were the world's leader in computer graphics software. You might have heard of Harvard Graphics. I retired when I was 30, and I gave my millions to money managers because I thought that was the right thing to do. I didn't know anything about finance or economy or anything. I was a programmer. But it was a really bad idea because the first 3 weeks, they lost $75,000. So I taught myself to trade. I figured I could do as bad as that. on my own. So I taught myself to trade. I read 117 books in the first year, and now I've read 744. I study these books thoroughly because the more you know about what everybody else thinks and the more technical analysis you know, the better you're going to trade. I didn't enter a single trade for the first year of watching the market and reading books. I also published a monthly magazine for 8 years called Trader's Catalog and Resource Guide. One of these days, I'm going to put it on the web version. I've written, well, let's leave the Stocks and Commodities magazine a minute. I've written 5 best-selling books: Trading 101, Trading 102, Electronic Day Trading 101, Getting Started in Trading, and TradeStation Made Easy, and Going Vegan with my friend Linda Blair. You probably know the actress Linda Blair. I'm now working on easy language, object-oriented easy language. So object-oriented easy language made easy with my friend Sam Tennis. I've written articles for just about everybody. There we go, and more. Here are my books. You can see those real quick. And I also wrote Using Easy Language 9.x with my friend Murray Ruggiero, who is now deceased, I'm afraid. And then this is the new one with Sam Tennis, Object-Oriented Programming Made Easy. Okay, let's see. Stocks and Commodities has rated me in the top 10 consultants, courses, and seminars several times. I told you about Stark Research, and I belong to all the important trading organizations. As a consultant, I've consistently been rated in the top 10 in Stocks and Commodities, and you can see right there, I'm third on consulting. I call it consulting and mentoring because I do programming. That's the consulting part. If you need, you've got an idea and you don't know how to program it, I do that. And then I also mentor. So I have people who come to me and want me to walk them through the market in a day. We can spend time on the computer and Zoom and walk right through it. Here you see quips and quotes. It's up here on my, here's moneymentor.com, and up here it says quips. If you click that, you'll see everything that people have sent to me in emails to tell me what they think of my work. And if you read this first one, I'm not going to read it to you this time, but it's very, very nice. This is one of my students. This is one of my students. That's one of my students. That's one of my students. This guy's one of my students. He started out with $25,000 in his account, and the quote said he's above 1.25 million now. But he told me yesterday that his account's now worth over 2 million. Started with 25,000. I have a Facebook page. I post things that what I think the market's going to do from time to time, and that's free, of course. And if you go to Facebook, you'll see those free things. You can also opt in, as I said earlier, to Sunny Side of the Street. And I do a live trading room for free every Tuesday morning at 7 a.m. Pacific time, 10 a.m. Eastern. You just go to moneymentor.com trading room with a capital R.html, and you sign up for that if you're interested. I have on my website, I have free articles and white papers and slides of presentations. And you just go to moneymentor.com/membership.html, sign up as a member, and you have access to all those slides and white papers. So here we go. What are futures? They're also known as derivatives because they are derived from the underlying. Let me address that a minute. Derived means, let's say that you want to buy live cattle, okay? Then you can go to the whatever show of some kind, cattle show, and buy cattle, or you can buy a contract that's derived from the price of cattle. So derivatives are not like stocks in some ways, but they are like stocks in other ways. If you own a stock, you own a small piece of a real company, and you can hold it forever. And it either goes up or down, or mostly they go up over time if you hold them long enough. Stocks don't usually drop to zero. Some do, but most don't. If you trade futures, however, you're buying a contract to take delivery of a commodity at a later date. So you're buying live cattle, you're going to take delivery of these live cattle at a later date. And I'll explain what those dates are in a minute. The problem is you could lose more money than your initial investment. You can buy stocks. And if you want to set up a margin account, the stock is borrowable. And that means that the brokerage house has them in the inventory and you can borrow them. In that case, you can short the stocks, but I don't like to do that. You'll have a margin account if you trade futures and you're borrowing money again from the exchange or really the broker. And the margin account, if you don't have enough money in your account and you made a trade and it was a loss, you give a margin call. That means they want more money in 24 hours. You need to bring it up to the margin. The margin currently for the S&P, the E-mini, is, I think it was 12,650. So you need more than 12,650 in your account to trade the E-mini. But if you trade the micro E-mini, 12,500 goes to 1,250. So that's better for learning. So what is shorting? Long is buying in the hopes that the market's going to go up and you can profit. Short selling is selling something you don't own on the promise that you'll buy it back later in the hopes that it will go down. Let's look at this. This is my TradeStation window, and I've got SunnyBands and the dynamic moving average and the dynamic moving average histogram all on here. And a long trade would be from there up to the top. So up in here somewhere, you take your profits. That's long. But if you want to go short, you can see the arrows right there. That's a short trade down to here. And there's another short trade down to here, and you can hold it like that and it just keeps going down. So that's short and the other one's with long. Why did I put quotes around it? You can't trade a futures contract on Tesla. There is no futures contract to my knowledge on Tesla because it's a stock, not a futures contract. So to go long and short like that, you need a tradable instrument. I'm going to teach you what tradable instruments are. You can't, you need to trade an instrument like, or symbol like ES, which is the E-mini, or corn, or soybeans, C and S, cotton. I don't know the symbol for cotton, but those are all futures contracts. So let's put the E-mini on a chart here. If you can look at my SunnyBands here, you can see points where you go up, it touches the inner band, you go down, it touches the inner band, you go up, it touches the outer band, we're down again. Like this, it comes back up, we're long for this. The SunnyBands just calls out all the trades. They're so easy to spot. So futures contracts expire on a regular interval every 3 months. In order to view the symbol on a chart, you need to know when it expires and use the code for the month and year, sorry. Or you can use the continuous contract at sign ES, which brings in not just the 3 months of data before the expiration, but the entire contract back as far as it goes, which I think is 1994, I think. So let's look at what the CME, Chicago Mercantile Exchange, tells us about symbols. So you can see Australian dollar is AD and HMUZ. What the heck does that mean? These are the expiration months. And I'll show you that next. British pound, BP, those same expiration dates. Here's one, cattle, feeder cattle, FC, and it has more months. It doesn't even have H. It does have U. So I don't know what those are, but we'll look in just a second to find out. Right, let's see. Is that the one? No, sorry about that. We'll go back one. So the futures contracts, if you go to moneymentor.com reference.html, or if you go up to the top of it and pull down to something and then go to reference. So common stocks, that they're just a symbol like TSLA or GOOGL. That's the symbol. So futures contracts expire on a regular interval, often every 3 months, except those ones we saw with more letters in the spreadsheet. Sometimes they trade more often than that. So futures, this is the history of why we call them futures. Futures used to be crops and animals. And crops came to market every 3 months. That's when the growing season is. And so do animals. They were born and matured every 3 months. So that's why we have HMUZ. H is January. H is March. M is June. U is October, September. H and U. I don't remember them now. Oh, well, it's late over here. So animals were born and matured every 3 months, and here they are. H is March, M is June, U is September, and Z is December. I know what they are. They're on my calendar. I have it set on the calendar to show me the expiration day and the rollover day for the contracts I'm trading. So here they are, HMUZ, March, June, September, and December. And there's a trick to doing that. The current month for ES is September because June has passed. So we're now trading the U contract. And the year is 2022. So here's the symbol. ES is the contract. U is the month it expires. And 22 is the year that it expires. And then there's the chart. And you can see right here where this vertical line is, that's where the rollover was this past month. And it goes down, down, down after that rollover period. Expiration, rollover, let's see if I have a slide for this. No, let's go back. Rollover is, no, let me start with expiration. Expiration is the third Friday of those HMUZ months. It's always on the third Friday. And rollover, which is when everybody gets into the new contract and gets out of the old one, is on the Thursday of the prior week. Okay, Thursday of the prior week and the third Friday. So what does delivery mean? Because you have to take physical delivery of some of these things. In the old days, the exchanges physically delivered the commodity to your doorstep, and they still do for some contracts. Imagine a herd of live cattle showing up on your doorstep. I used to worry about that a lot because back then they were taking delivery of all of them. So you better be sure you get out on rollover so you don't take delivery of 1,000 cattle. But for others, they simply cash you out of your position, win or lose at expiration. So with the ES, they just will cash you out if you're not in the right position, a right contract. So here's the dates so you don't take delivery. Third Friday of the third month is expiration. Rollover is the Thursday of the prior week. Traders roll over on this Thursday and begin trading what we call the front month. So U is the current front month for the ES. Yeah, rollover Thursday. I have it on repeat forever on my phone with an alarm, so I know it's rollover. And you simply close the contract you're in and buy or sell the next one. So if you're in M, which we were at the beginning of June, you close the M contract out and you buy or sell the U contract. And that's what my little calendar looks like. So here was the Thursday of the prior week, and there's expiration right there on the 18th. You can read, I don't know if any of you take technical analysis of stocks and commodities. We call it TASC. Does anybody take TASC? Chat to me, people. It's usually about 4 or 5 pages in from the back of the magazine. And right there where you can't read it, it says S&P E-mini. And that has the most liquidity of any contract. See, the thing has has a chevron here telling you that it goes further out than that. So this is the most liquid contract. And the next most liquid one is the 10-year T-note. So that would be TY. And the next one down, NASDAQ E-mini, is down here at 7th. Somewhere, I can't read that either. 5-year. Anyway, so the NASDAQ E-mini is 7th for those of you who want to trade the NASDAQ instead of the E-mini S&P. YM, which is the Dow contract, is 19th on the list. Just remember, don't buy something you can't sell. If there's not enough liquidity, you're going to get big slippages in your trades. And there you can see the E-mini. So let's see, how does the ES compare to the Dow and the NASDAQ? It's got them all on one chart here. You can see the highs match, low, not quite the low, but it's close, and it is the low again on the NASDAQ. So you can see these charts match, high here, and high here. They really follow each other very closely. When trading stocks, you pay the value shown on the quote. So if Google costs $29.70 per share, or Microsoft costs $3.36 per share, then that's what you pay. Unless, of course, you have a margin account where you trade on borrowed money, then there's no leverage. That's not what I meant to say. Then you will have leverage if you're trading on borrowed money. But futures are leveraged, and they're highly leveraged. So instead of 100% of something, we pay a small portion. The S&P 500 right here going across, you can see that the margin, it was 11,550, sorry. And here's the intraday margin and the maintenance margin. But the number you need to remember is this, whatever this shows, 11,550. You can find that on TradeStation's website. You can find it on the CME site. And I have an app for that. You remember Elizabeth Warren's always saying, I have a plan for that. I have a plan for that. Well, I have an indicator for that. If there's something I want to make easy in my life, my trading life, I write an indicator for it. You can see there's the E-mini. Come on. So how much is one share of the E-mini? This is a couple of days ago. It was at 3,716. So let's figure out how much that's worth. There are 500 stocks in the index. So 500 times that price is 1,858,000. That's how much you're buying when you buy one share. But for 11,550, you're controlling just under $2 million. And that's just 0.6% that you have to put up. That's highly leveraged, steep leverage. It's certainly less than you'd put a down payment on real estate. You might have to put down 10%. Some people put down 20%. And the E-mini is just 0.6%. In answer to, aren't futures risky? A lot of people think that since futures are leveraged, you can lose all of your money. That's what people say. Since you're so highly leveraged, you could lose a lot. That's true. If you don't have enough money in your account to cover a loss, you will have a margin call. You've got to have that, whatever the margin is, 11,550 in there at all times. You can lose more than it is in your account that way, because if you cannot meet the margin call, which is you got to put money in there to get above the margin value. If you can't meet it, they will close it out and you'll owe money that was more than was in your account. The broker will call you or sends you a notice by email that you have a margin call, and you've got 24 hours to bring your account back over the margin. I got one of those in my life. It scared me to death. If you're sitting on a losing trade, this could amount to a lot of money, because it's going to keep trading against you, and you can't sit there and hope it's going to come back. You have to put the money in the account. So how much can I make? The E-mini is traded at $12.50 per tick, or $50 a point. So if it's trading at 37.16 and it goes to 37.17 and we're long, then we make $50. That's 1 point. 16 to 17, 1 point. So you get $50 for that move. And I'm going to show you a real life short trade in a minute here. This is from Metastock, this chart, and you can see SunnyBands on Metastock. It's, if you look from here to here, that's a short trade. And it was 300 points down. So 300 points on this stock, which is Google. So if you got 300 points, that's $1,200 in 21 days. You on a 12,000, well, 11,550, really. So we're going to round that off and call it 12,000. So you get $1,200 on $12,000 in 21 days. This is the same idea, a short trade on the, this is the December contract of last year when I made this chart. You can see there's the short trade of the ES. So it's 275 points, which is 13,750. 275 times 50 in 20 days on 12,000. So which would you rather have? Let's go back. So we could have $1,200 on Google in 21 days, or trading the E-mini, we could have 13,750 on the same 21 days. I prefer to trade the E-mini personally. I've been trading the E-mini for 41 years. So does the S&P ever go to zero? It hasn't in the 41 years I've been trading. And what if the world came to an end? You would have worse problems to think about than your E-mini contract. The biggest point drop I've ever experienced was the 1186 points during the COVID crash. Of course, there were bigger percentage losses, but that's the biggest point drop that I've experienced. So remember, you can't hold on to a futures trade waiting for it to rebound. You'll have to give it up. Why can't you hold it forever? Because it expires every 3 months. So, and what if the rebound takes a year? Your contract has expired several times. There are also limits in place to avoid market crashes. So from Investopedia, we see that limit up is the maximum amount of prices permitted to increase during one trading day. And you can look up the limits on the CME group.com. At CME, they'll tell you what the current limits are for that. Limit down is the maximum permitted price decline occurring over one trading day. So trading limits are examples of circuit breakers, which are interventions employed by exchanges to help maintain orderly trading conditions during turbulent markets. So soybeans, for instance, goes limit up several times, but I've only experienced limit up or limit down twice in my trading career on the ES. So now that you know it's risky, I'll show you how I trade. I've been trading for my whole trading life. And at the end of this, I'll even sell you my strategy and indicators to show you how that works. And I'll teach you exactly how I trade it. That's for free. It's the same one that made me #1 trader twice. So the first thing I put on any chart I look at are attractors. I coined the term to describe all kinds of support and resistance, including moving averages where price tends to revert to the mean. The next thing I put on my charts is my SunnyBands indicator. It's based on my dynamic moving average, the gold and purple lines in the center of the bands. You can see the gold and purple lines in the center and the bands out there. Now I've already drawn 2 attractors on here. The lower one I drew because this high and this congestion are all right in that area. So to me, and then you can see that this hits it on the bottom. So you can see that's a strong attractor. The top attractor is from the high. You can see out here the high of this chart. And I drew another attractor. Now when the market breaks those attractors, it tends to move faster in the direction. If it breaks up, it's going to move up faster. And if it breaks down on the downside, it'll move down faster. Here are the detractors on a different time frame. You can see here this blue line at the bottom goes across here and across here twice. So that's a strong attractor. Likewise, I've drawn an attractor starting right here at this congestion. And look, it hits it over here again, and it hits it over here again, and then it moves up. And this one was on the highs, but the congestion of the highs is what I drew it on, because that's a strong attractor if price keeps trying to break it and can't, about 5 times. Here's how I trade the DMA. The crossover is the macro clue. And by that, I mean, it's the overall view. It's not the micro view where you get down to entry points. It isn't early enough for me. And that's why I created SunnyBands, because it's faster and shows me the turns better. After that, I created the histogram, which is even more precise in its entry points. So here's how I trade them. I've got SunnyBands on the chart, the dynamic moving average on the chart. I've got Fibonacci lines that I put in here. So I can, off of this move right here, I put in the Fibonacci lines. And you can see how beautifully price goes right to the Fibonacci numbers and breaks out and keeps on going back down to the Fibonacci line right there. And right here, and I can't do it because I don't have a chart on, this is the position that I would go long. It's been red coming down, turns gold. That means it's going up, and I would keep it until this line right here, which is right there. So I'd be long from here to here. Oops. And then you see the red ones come in. That's where I would go short, and I'd be short from here down to when it turns gold right there. So that's how I get my readings. It's just reading this histogram. And if you're interested in having these, I do give 7-day free trials to any TradeStation or multi-charts users. And I spend usually about between a half an hour and an hour with people who are new. I call everybody students, people who are new students of this market indicator. I sit with them we go through it over and over and over until you got it. That's free too. So let's look at the dynamic moving average turns. You can see here I've made vertical lines. When the red line starts going down, you go short. Right here, the red line turns green, you go long. Here, the red line comes out again, you go short. Right down here, the green lines start right there because we've got a lot of congestion in the lines right here. So we're still short. And then we've got a solid red, a solid green there that also breaks the lower sunny band and goes up on a blue candle. So we go long again. And here, when the red starts coming up again, the gold tells us we're still long, but the red then starts showing up here and tells us to go short. So it's just as clear as can be what you're supposed to do. And that's all there is to it. I look at the attractors. I also look at vantage point. Does anybody know vantage point? Is anybody here? Vantage point is a AI. It's called Vantage point is an artificial intelligence predictive software. And I look at it every day, every night before trading. Like I looked at it about an hour ago, and it says tomorrow's up. So I look at Vantage point and I keep that in the back of my mind as I'm trading. I study my DMA, dynamic moving average, and my SunnyBands, and then I trade the E-mini on a 1 and 5 minute charts both. I get moves, predictions from my placements, actually from my 5-minute charts, and then I verify them on a 1-minute chart. And I do trade many times a day. With equities though, I buy and hold for weeks to months. In the next step, I add a 5-minute chart to show me long term. On the 1-minute chart, I add a 5-minute chart. Let's see if I put a chart of that in a minute here. It's kind of tricky to put 2 of them on the same chart. So I do have a YouTube channel, and it'll show you how to put 2 SunnyBands with 2 data streams on 1 chart. If you don't understand it, give me a call. I'm happy to help you. I'll walk you through it for free. Yeah, I didn't have a picture of that. Here's my YouTube channel, and you can see I have several videos there, always making more. There it is, 2 data streams on 1 chart. So we've got a 1 minute chart in the middle with a 5 minute chart is hidden, but you can see that the SunnyBands, I've turned them different colors. So you can see the dark green is the 1 minute and the light green is for the 5 minute chart. Look how strong a move you get when the 1 minute SunnyBands penetrates the 5 minute SunnyBands. We go down, 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 down. And then this thing, which is a great, huge candle wick, and it goes down and touches the 5 minute on that outer, and now we have a nice move up again. So I like to look, the long term to me is 5 minutes, and the short term is 1 minute. And again, we got all those turns on the dynamic moving average histogram. It also works on longer time frames. Here's weekly. It doesn't matter what symbol or what time frame you're looking at. This works on them all. So here we have a long signal, short, 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 short. There's another long signal. Goes up to here, come down. On the red, we go short, and we stay short with this purple. Works on any symbol. Here's Google, same story. Long, short, long, short, long, short. And the last piece of the puzzle is every night before I go to bed, I put away all my trading tools. I look at Vantage Point software. Let's see if I have a picture of that. Yes, I do. So this gray bar right here is the prediction for the next day, which was the 20th of June. And you can see their predictions as they go down through these. And you can see where they say to go short is right here at this cusp. Okay, short, 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 short. That's what I look at every night. So I look at Vantage Point, I draw attractors on my charts, I put SunnyBands on the charts, I put the dynamic moving average histogram on the charts, and I read the signals. And I take trades. That's about it. Make money. Can't be any more disciplined than that. Those are the only things I use. Here's my website, moneymentor.com. It's been active on the web since 1995. When I first put Money Mentor on the internet, there were 10,000 users. Now I think it's 4 or 5 billion. I can't remember. So try it. It's free. Just go all through the Money Mentor. There's all kinds of resources on it. You'll be amazed by how many resources are available there. So please drop by. There's the website. Here was what I was telling you. If you go to resources, you can look up margin. You know, there's books and articles. I've got my Sunny Side of the Street is in books and articles, products and services. Oh, I have if you look under products, excuse me, and services, I have a free podcast. So you can go to my podcast, which is the Sunny Harris Show. So you can go to the podcast and listen to it's designed so that people like you can become familiar with gurus, people who write the books and sell their systems. Sorry, I had to get a drink of water. And so podcasts, Sunny Side of the Street, and lots of resources. And if you want to read my quips and quotes, just go to quips. That's what people are saying. The products that I have were all developed for my own use and my own trading. I'm not like a lot of other people who develop things just to sell. I don't have anything that I sell that I don't use in my own trading. So I make them available to you, and I'll show you exactly how I use them. And if you want to buy anything, go to moneymentor.com, order_form, HTML. And it's also right at the top. Let's go back. Right. Where's the order form? It's not on this one. Well, right out here in the other ones, there's an order form. I've updated it. And I do all the programming for the website too. So here's what the order form looks like. If you buy anything before the 30th of June, I'll honor this price, $4.95 per hour. And now it's $5.65 or $5.45, but I'll honor this price because it was in the presentation. Browse through those things because it's there's just so much to offer. So if you order before the end of June, I'm going to give everybody 20% off of all indicators and strategies. That's before 30th of June. But if you order before the 7th of July, I'm only going to give you 10% off. And it also includes my consulting and mentoring time. And of course, if you want a free 7-day trial, you can send me an email or give me a call and go to moneymentor.com. That's the best way to find everything. It works on any symbol, any time frame. All of my indicators work on any symbol, any time frame, and they work on TradeStation or multi-charts. What I have to offer today, I've got more indicators than this, but I'm offering SunnyBands, the dynamic moving average histogram, and my PHW dots. I didn't show you that yet. I'll show you that in a minute. So this is on the NASDAQ, that's SunnyBands. This is SunnyBands and the dynamic moving average histogram. And this is the PHW dots. You see the yellow dots that call out the bottoms and tops. That's called PHW. And that's what I use to tell me whether I got in at the right place or not. I love keeping this on my chart and seeing how it matches up to my trades. I learn from it. So all this includes cutting edge indicators and strategies, world-class trading education, a live trading room, and access to the members only part of the Money Mentor site. It also includes remote installation and support. I'll help you through the installation. I'll log into your computer and show you exactly what I'm doing. And it includes support. So you can ask me all the questions that you need to ask about how to use it. And access to me anytime, any day. Well, almost. I work 16-hour days, but I do sleep. Costs are the most popular, which are those three. Normally $24.95. I'm discounting it with the 20% off to $19.96. The histogram with 20% off is $7.96. The PHW with 20% off is $5.56. So the total for all three would be, or is, $33.48 for the discounted prices. But I'm going to give you another 20% off. If you buy all three, you can get them for 40% off, $26.78. But again, remember, that's till June 30th. Okay. Are there any questions? Let's take some time to query the attendees and see if I can answer any questions before my time's up. I think everybody went home because it's so late. But for those of you who are watching this recording, give me a call. Ask me any questions you want. I'm happy to help you. I'm happy to show you what I do anytime. And there's no such thing as a stupid question. Thank you so much. Thanks, Timing Research, David and Anka, for hosting the event. And audience, thanks for your attendance. Here's my contact information. There's my phone, my Skype number. Nobody uses Skype anymore, though. My email address is sunny@moneymentor.com, and the website is moneymentor.com. That was it, I guess. Yeah. All right.